Hi, this is Zak Mir with the US Chartbreakers for Monday, the 28th of November here at Vox Markets. Starting off with the S&P 500, where we've got this rising trend channel. We had this rising trend channel from the turn of the month, beginning of October. And top of the channel there heading towards 4,200, the floor of the channel around 39.30. Unfortunately, we had a failure over the end of the week, or by the end of the week and today, at the bottom of a gap down from September. Recently, the best we've managed is 40.34, so we need a definitive break back above that to get back above not only the 200-day moving average where we failed back in August, but also then hopefully to retest the August resistance area going into the next 1 to 2 months. Otherwise, a break of 39.30 could take this market back down to the 50-day moving average area, almost at the 3,800 level. Bit of a warning in terms of the decline with the bearish divergence, i.e. a higher, slightly higher late November peak, but slightly lower RSI situation there. But at the moment, still not all lost for the bulls, but we want to hold on to 39.30, but we need that break back above the 40.37 area to give us 4,200, 4,300 after that. Moving on to the stocks, and most of these in a rather better position perhaps than the S&P, but we'll have a look at Axsome Therapeutics first. Here we've had a gap to the upside, breaking through that line of resistance around $64. We've got the old resistance from the end of August there around 71.98. And an end-of-day close above that should be enough to give us a fresh boost up to the resistance line projection there from back at the beginning of the year. That's heading towards the $85 plus area. And that could be seen by the end of next month, especially while we remain above the $70 area. On to a stock which I looked at quite recently, which is normally a good sign because it means that it's made progress from where it was on the other look. Here we've got Cabaletta, which is in this bull flag at the moment, roughly between the $3.20 and $4 area. End of day close above the $4 level, and we should be looking at decent move to the upside. That is suggested by a line of resistance, which I'm just about to draw now. That's coming then from the early part of the year, looking really for the $6 area. Almost exactly there on that situation, assuming that we've been in a rising trend channel from the beginning of the year in that kind of way. Below 320 obviously delays or cancels the idea of $6, but looks like a pretty set in place for the shares, in the sense that a break of the $4 area will give us $6 near term. On to one of the more followed stocks at the moment, and it's been a recovery situation as well. Cosmos Holdings. Here you can see that we bounced off the lows quite nicely, starting off with the break of the 50-day moving average, which was done via an unfilled gap, which is obviously a very healthy thing to do. Here we've got a situation where the upside looks as though it's going to be up towards the 200-day moving average around the $1 mark, and especially while there's no end-of-day close back below the previous session's high, that was around the 48 cents level, looking for up to $1 perhaps as soon as the end of December. Next situation is one which is a new one for our little sweep of stocks. Comes in the form of Immutep, and here you can see that we're just breaking through the 200-day moving average, hoping to hit a line of resistance from back in June. That's currently heading towards the $3 area, and that's valid while there's no end of day close back below today's intraday low to date, $2.24, which is roughly the area of the 200-day moving average as well. So while there's no end of day close back below the 200-day line, looking for up to $3 on Immutep, perhaps by the end of next month. Our confidence boosted by the recent double unfilled gaps to the upside, and also the rising 50-day moving average. Next situation is another one which is looking relatively healthy at the moment, Medicine Over. And here we've had another gap through, well, another move through the 200-day moving average. That's at $2.39. Above that on an end-of-day close basis, looking for that April resistance line projection as high as $3.12 by the end of next month. So quite similar to the previous stock. Another well followed situation at the moment coming up. The situation looks as though we've had a reasonable run so far, hoping that we will find support towards the $1.60 area. While we're above that, still looking for further progress within a rising trend channel from back in September. That's heading towards the $2.50 area, perhaps by the end of next month. So above $1.60, looking for $2.50 by the end of next month within that rising trend channel. Another situation to keep a close eye on at the moment, the near term, is NRX Pharmaceuticals. Here we're just nudging the 200-day moving average. The situation here is that we've been in a rising trend channel from basically the end of May. Top of the channel there, heading towards $1.60. And the view now is that while we remain above this, we'll remain within this rising trend channel and remain above recent support for the shares around the $1.10 area, then looking for $1.60 by the end of next month. If you're cautious, you'd wait for an end of day close above the 200-day moving average of $1.30 before targeting $1.60. Also worth noting that the top of that gap down there around 136, and therefore again that could be a trigger, a break of that, or an end of day close above that could be a trigger for a move towards $1.60. On to a stock which I've covered quite recently as well, Palisade Bio. Here the situation is that we were looking for the shares to push higher, but it looks as though at the moment the 50-day moving average around the $5 level really is acting as a bit of a block on progress. What we want to see now is a clear end of day close above the 50-day moving average at $4.75 to be more precise. And if we can do that, then the target here could be the top of a broadening triangle from back at the end of September as high as $8 over the next 1 to 2 months. The reason for the relative enthusiasm here, even though we've slightly tipped back, is that we have an unfilled gap to the upside, a bear trap gap reversal here, and that normally suggests that the bears have been squeezed out. And here, I suppose the proof of that would be a break initially of $4.20 and then the 50-day line around $4.75. But key here is to break that 50-day line on a sustained basis. Cytec, another stock that I've looked at of late, and here you can see that we've tried to push towards the 50-day moving average. That's there at $3.40, and support of late around $2. If you want to close in tightly, then $2.20 the support for people trading this stock close to the market, and looking for really the shares to not go back below the $2.20 area. Ahead of that, then they would then push towards the 50-day moving average at $3.40. So let's see if the stock can push back, resisting the recent declining 50 and 200-day moving averages. On to another perhaps rather better looking situation, Stryve Foods. The stock here gapping up today after a bear trap below September support around the 39 cents area. That leaves us looking for the top of a broadening triangle from back in July as high as $1.32. And if we can complete that broadening triangle without any end of day close back below September resistance around 76 cents, that would be a win. The ideal scenario is that there's no end of day close back below today's 80 cents levels, above 80 cents, looking for $1.35 over the next 2 to 4 weeks. Last couple to go now. First one is one which hasn't appeared here before, but let's see if we can get more mentions over the near term. We've got Talkspace, good divergence there with the bullish divergence after the latest gap. Want to see an end of day close above the 50-day moving average at 83 cents. If we can do that, then the target by the end of next month would be towards $1 or even $1.10. Stop loss on the up or the rising argument, or the bull argument in other words, is basically an end of day close back below today's intraday low at 73 cents. So at 73 cents, the line in the sand. Otherwise, just wait for an end of day close back above the 50-day moving average at 83 cents. Finishing off with a stock which is again another new one for the US chart breakers. Here we've got a nice U-shaped reversal on the daily chart of Vapotherm, and we're assuming that we can remain above recent support, i.e. Friday support at the 56 cents area. Above that, looking for the 50-day moving average at $1.25 over the next 2 to 4 weeks. That's it for me today. More updates later during the week.